thank you for doing this question and answer with me. I think this is going to be a pretty cool topic that a lot of people will get some good information out of. But I know you, but our vast audience that I'm sure we'll have on this video doesn't necessarily know you. So take a couple seconds, introduce yourself.
I'm Chet Heilman. I'm a branch manager with Delmar. As you know, I'm also the renovation specialist for the company. Have been working with renovation loans since 2006, 2007, and work with a lot of folks who house hack, a lot of folks who are interested in these renovation products. So it's been something that I've worked pretty extensively on for a long time.
Very cool. Very cool. Well, let's jump right on in. So what I've heard of is a 203K loan. But from talking to you leading up to this discussion, you had mentioned that there's conventional options for a home renovation project. So tell me a little bit about that.
Yeah, so just like standard loans, if you're somebody out there who just wants to buy a house, we're going to look at two really familiar products, FHA and conventional financing. With our conventional buyers who are interested in renovation, they often think that the FHA 203K is the only way to do it. They can use the home style renovation. There's also another product called a choice renovation. These are often for borrowers who have scores up above the 700 level, and we'll look at the FHA 203K for those clients in the 600 FICO score range.
Okay, interesting. And just so that everybody knows what we're talking about here today, we're talking about renovation loans. So somebody who wants to buy a house for $100,000, but the house needs work, or they just want to put work into the house. These are loans that you can borrow $150,000 and use that $50,000 for different things that the house needs or different things that the house wants. So that's what we're talking about. We're talking about these renovation loans. And Chet did a good job outlining that there are not just the most popular one, famous one is the FHA 203K, but there's other options as well, which is good to know. So there's two things, at least two things I know, and feel free to add more, but there's a couple questions I know you get all the time. I get them all the time when people ask me about these loan types, but can I do the work myself? Can me and my dad, me and my buddy down the street buy a house and do this work ourselves?
Great question, Ryan. This is definitely the most common question. It's the first question I get. Usually it's somebody very handy. They're a construction person. They've grown up around construction. They want to be their own general contractor, and you can't do that with this product. You can, however, do self-help. So you can work in tandem with an approved contractor. Maybe you do some demo in a bathroom or demo and you rip out the cabinets in the kitchen. That does reduce the labor cost, but you do have to have an approved contractor.
Okay, very good. Thanks for explaining that. And the other question I'm sure you get a lot is, can I do this for an investment property?
We don't do these for investment properties. That's really a hole in the market. And honestly, I see a lot of people use hard money in situations and refinance out, but this would not be a product for investors. Now, as a primary residence, what you're saying is that you're going to occupy the home for 12 months. So it doesn't mean it couldn't be a rental property for you down the road, but your initial intention is that you'll live there for 12 months.
Okay, cool. Thanks for explaining that.
Mm-hmm.
So if you are those people, drop off now. You don't need to waste your next 15 minutes or so listening to us. So, okay, so tell me a little bit about the structure of the loan. So there is a down payment, I'm assuming. What does that have to be? Tell me about that.
So, and this is usually a surprise for a lot of the clients that I talk to. If you look at traditional construction loans, there's typically a 20% down requirement. With these products, the FHA 203K only requires 3.5% down of the combined purchase and renovation. The conventional versions only require 5% down of the combined purchase and renovation. So really very little out of pocket. That mirror some of the great first-time homebuyer products that we use.
Okay, cool. So somebody who's buying, just to put it in numbers, somebody who's buying a house that is $150,000 and they want to put $50,000 into it, if they get the FHA loan, their down payment's going to be $7,000. Is that
right?
Am I getting that correct? Okay, fantastic. Yep. Fantastic. Okay, cool. So, what is the process leading up to the contract, and specifically, what is the process after you have a sales contract? What happens from there?
Yeah, and even before we get there, we'll always complete a full financial review for all of our clients, and we're going to simulate how much renovation costs we think we're going to need. So we're not just qualified for what that purchase price is, but what your end loan amount will be that includes the renovation. So that's kind of step one. Once we have you qualified, you're ready to start shopping. The next step is finding a contractor, taking your contractor through the contractor approval process. They need to have a license, they need to have insurance, and often will be required to provide a few references on other jobs that they've worked. So now we've got you approved as the buyer, and now we've got the contractor approved. So the next thing is finding the house. Now, once we're under contract for a home, the first step is to get that contractor in as quickly as you can, and they start to prepare the bid. So you'll be walking through the property with the contractor, giving them your ideas of the tile you might like, where you'd like to move a kitchen, things like that, and then they'll start to put that bid together for us.
Okay, fantastic. All right, so then they go to closing. What does closing day look like?
Yep. So closing day, getting up to that point, during the closing process, once the bid is completed, we'll then order an appraisal, and this is going to be a third party, independent third party that comes to the property. They're going to give us two values. They're going to walk the property. They're going to give us an as is. What is the home worth today? And what's it going to be worth once the renovation's completed? That's what we call an ARV, after repair value. So assuming that checks out, you've got at least 5% equity for the conventional loan. You've got some equity there for the FHA. What you can't do is add more renovation than the place is worth. So it's just got to be reflective there. Then once that's approved, we get to closing. You show up with a big smile on your face. We high five each other. You bring your money, and at that point we're closed, and the contractor can start construction.
Yeah, I jumped the gun a little bit. I forgot that appraisal part is a key part for sure. So again, going back to our situation where you're buying a house for 150 and want to put 50 into it, the house does have to appraise for at least, and you said the ARV, the after repair value. Did I get that correct?
Yep.
Has to be at least $200,000. Okay.
Correct.
All right. Well, cool. So okay, now you bought the house. It's your house. What then happens?
So two things. One of the most common questions I get is, if the house is uninhabitable during the renovation, do I have to make payments? You don't. So that's something that during the loan process, they can factor in and actually finance payments, so you don't have to come out of pocket while you're not living in the home. This would be for more of a gut renovation where you can't be inside. So then
you would, so in that circumstance, you would finance the interest for a period of time, type thing. Okay.
Correct.
Yep. Did not know that. Very good.
Yeah, and you can do that for up to 6 months. So that really, for big extensive projects, that's a relief for a lot of clients who maybe they're on a lease, maybe they haven't sold their primary, they don't want to have 2 house payments before they can occupy. So you can set that up during the process. Then the construction work is completed in phases. So the contractor is going to detail operationally how he's going to complete this job on the bid. So phase 1, for example, might be ripping out the kitchen, ripping out the flooring. Say it's old carpet, you rip all that out. He can either take pictures and upload those to an app system that are then approved, or a HUD inspector who oversees the project can actually come to the site, review it, and then money is distributed in draws as each phase is completed. A distribution of cash, then payment, goes to the contractor, where the homeowner signs off and the contractor signs each check as work's completed.
Okay. So the contractor can't skip town.
Exactly. Yeah, exactly. Get a couple payments, and then to even as another safeguard, all of these things in these rules, they're home buyer protection. They're to protect the consumer. So there's another one at the end where there's a final inspection where we hold back the final 10% payment to the contractor to make sure all the work is completed. So they're not jumping on another job and you never hear from them.
Okay, makes sense. Makes sense. Now you had mentioned when we were talking earlier, what happens if, like, I think your example was you punch into a wall and there's leakage that you didn't know about. Therefore, the instead of it costing $50,000, it's going to cost $60,000. What happens
Yeah.
then?
Yeah. Great question. Because it is a concern. It's very difficult when you're putting a bid together as a general contractor to be 100% right. Just because there's so many unknowns, like you mentioned, you open up a wall and you have something you didn't know was there when you started the plan. So what we do to take care of this issue is it's called a contingency fund. So we create an emergency sort of slush fund that's generally about 15% of the total renovation cost on the project. This sits there as this emergency fund in the event that something's more expensive. They're not coming to you, Mr. Borrower, and saying, hey, we need another 5 grand. Sorry, we've got this built in. Now, if we don't use this and the project's great, everything was at budget or under budget, this then is just, it reduces your loan amount at the end of the process if you're not using it. Or you could file a change order and make additional requests. Maybe you pour a patio, maybe you do some more lighting, but you can use this for additional work if you want to as well.
Now, you also mentioned, when I say limitations, I don't mean the limitations we mentioned at the beginning, in that you have to get a general contractor and it has to be your primary residence. But are there limitations on the work that you do?
In that it's funny because I think a lot of folks are surprised to hear that really the only limitations that the things you cannot do as part of your renovation are build a swimming pool or add a hot tub. But outside of that, even things that are outside the box, buying appliances, washer, dryer, microwaves, all of these things you can purchase through the loan, landscaping, privacy fences, decking. So really think both interior and exterior, just not a pool or a hot tub.
It's not a pool or hot tub. All right, noted, noted. Well, fantastic. Well, tell me a little bit about, I'm assuming that the cost to do this, the actual fees to do this for a client, are going to be higher than if they just do quote unquote a normal loan. Would that be accurate?
Yeah, there are, and depending on the scope of the project and the size of the project, those could change. For example, if you're making structural changes to the property, maybe you're going to knock out walls in the house to create an open floor plan. That's a pretty popular renovation. That would require a structural engineer's report, for example. The HUD inspector who's going to oversee the project and make sure your contractor is doing the work correctly, they charge a fee. So generally speaking, I would say if we want to be conservative, closing costs are probably about $3,000 more for a renovation loan than a standard loan. So it's really much cheaper, I think, than most folks anticipate.
Chet, thank you so much. This has been enlightening for me, who didn't know a ton about this product, and hopefully enlightening for the 6 or 7 people who are going to watch.
Yeah. Hey, thanks so much for having me, Ryan. I appreciate it. And like Ryan said, anybody that wants to talk renovation with either of us, we'd love to talk to you and walk you through the process. Or if you're a contractor who's interested in becoming approved, that's also a conversation we'd love to have.
Good point. Fantastic point. Awesome. Thank you, Chet. Have a good day.
Great seeing you guys.